This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So this is a very important week for those of us in the value investing community because this is the week before the Berkshire Hathaway annual meeting, which will be this weekend on May 2nd, I believe it is. Yes, May 2nd. And this is when we have always heard from Warren Buffett and previously Charlie Munger and the rest of the management crew at Berkshire Hathaway, but really just Buffett and Munger about what is going on with the Berkshire Hathaway companies. They've had the big celebration there in Omaha every year for the recent years, where you could then see the companies that Berkshire owns, check out some of their products. You used to be able to maybe meet Buffett as he wandered around the floor, but that's a little bit less now. And now, as we know, Charlie Munger has passed away, so he's no longer part of the fun in Omaha. But I wanted to talk this week about why it's always important for the Berkshire Hathaway annual meeting, but this year even more so, because I do feel like this could possibly be his last one. We don't know, but he did warn us at last year's annual meeting that one could have been his last one. He doesn't know either. He did say that he was not having any health problems, but that, just given his age, he's not sure how many more of those he's going to be able to do. So he is 94 now. Obviously, Charlie Munger went until he was 99, still attending these. And so we don't know, but he is kind of preparing us for the fact that he may or may not have another one of these. But we do know for now that we are, yes, having one with Buffett himself here in 2025. But I do think investors should be considering, the difference between Warren Buffett at this stage in his career and Warren Buffett from even 10 or 20 years ago, and then certainly from 40 or 50 years ago. We are dealing with Warren Buffett in his twilight now, and what kind of impact that may have on Berkshire Hathaway itself. And then, not even in addition to dealing with Buffett in his twilight, we have to deal with what is happening in the greater economy right now, which are the tariffs. And Berkshire Hathaway, if you haven't been paying any attention to it, maybe you're not a shareholder, maybe you just know it as, oh, that's the company that owns all the Apple shares, right? He's one of the biggest shareholders in Apple, although he has reduced that holding considerably now. And he has got all that cash sitting there, but Berkshire is so much more than that. And it really reflects Buffett's own era of investing and his determination to invest in American manufacturing and industry, the old industry. So he owns a lot of industrial type of companies in addition to the stocks like Apple, and in addition to his cash hoard, and then in addition to insurance. That's the other area he has loved for his whole career. Obviously, Berkshire owns Geico, but it owns a lot of reinsurance companies, and that has been also dominating the portfolio. But if you strip away that, then you're left with a lot of industrial companies and retail and consumer-based companies as well, manufacturing and even metals and things, metals, chemicals, oil, just the whole gambit of, say, the old economy. And this has worked well for Buffett because he's bought these companies at cheap prices. They're companies with great track records over many decades. But now we have this thing that's going on with the tariffs and this trade war. And Berkshire Hathaway has quite a bit of exposure to it. Now, will we hear about it at the annual meeting? So for those who haven't watched, and maybe you haven't listened to some of my podcasts that have talked about what he said in the annual meeting over the years, he doesn't tend to say that much about the ancillary companies. And, he'll talk about what stocks they might have bought or sold, like last year he did when he did reveal that they had been selling some Apple. He talks a little bit about the cash, but he doesn't really go into each particulars. And that's a little bit frustrating for those of us who kind of want to know what's going on behind the scenes at some of these. It's a way for them to kind of handle it internally, and then those of us on the outside and even the shareholders really have no idea how good or bad it is unless they decide to reveal these things. So with the tariffs being such a big issue and their exposure pretty high, I'm hoping that we're going to hear at least something, possibly from the CEOs of some of these companies themselves. A lot of times at the annual meeting, Berkshire will make them available to the press, like CNBC will interview them. A lot of times when they take like a break in between the two segments, they will have some of these CEOs that are on either like a recorded interview with CNBC anchors, or sometimes live, like in the break period. But those are just the CEOs of companies that have been hand chosen by Buffett and Berkshire to kind of put out there. And much like we see with Amazon, they tend to put out, their best facing forward. Why wouldn't you? You're not going to put out the companies that are struggling right now to go talk to the press. So that's why it's hard to really know what's going on at Berkshire Hathaway. I did want to cover a few of the companies I feel like people should maybe be watching for good or bad right now that Berkshire owns. In addition, I'll talk a little bit about the stocks and what the portfolio is actually looking like right now. But I do think the more interesting side of the story going into this annual meeting is really what the underlying companies are doing. So remember, they do own one of the largest railroads in the United States, BNSF, Burlington Northern, Santa Fe. It's big here in the Midwest. We all, many of us in Chicago, write it because they do the metro service on their lines, on the BNSF line here out to the suburbs and into the city every day. It goes out to Aurora, for those of you familiar. So you'll actually see the BNSF rail cars, but if you're waiting there for a train on that line, you'll also see the BNSF freight line trains going by with all of their products on there. So those are always interesting. I kind of try to gauge like how long is the train while I'm waiting there at the gate or waiting for my metro train to come. But you can see it a lot here in the Midwest, so we are more exposed to it. Now, BNSF is not a West Coast or East Coast port railroad, but it doesn't mean it's not meeting up with Union Pacific and the others, and that it's not bringing the freight in from the ports eventually. So that's something to keep in mind, that with the China tariffs, the freight has really plunged here, and we're going to see it in the rails and in trucking, and we're already seeing it on the ships and in the air as well. But BNSF probably will see some impacts here starting to hit soon enough. And what will that be? How bad is it going to be for any of these railroads? We don't know yet, but keep an eye on BNSF if Buffett talks about it. Then they also own the paint manufacturer Benjamin Moore. I'm not sure what the impact's going to be there, but it is going to be impacted by the slowing in housing still, but that's been going on for 3 years. So I feel like it's probably a pretty depressed time at Benjamin Moore anyways. It might not get much worse. They also own Clayton Homes, which are the pre-made homes. So how much is that going to be impacted? How much are the products that they use to make those imported in? I don't know, but there's probably some, because even the regular home builders have said, yes, they are going to be impacted by the tariffs. Then I took a look at Shaw Industries. So they're in flooring, and they're one of the largest carpet manufacturers in the world. I couldn't find a lot of information on the website because, again, they're just owned by Berkshire. They don't have to tell us everything, even on their website. But in 2021, 67% of supplier spending was from the 31 states in which it operated. So it does have a lot of the spending on suppliers in the U.S., but it appears there may be a chunk that is not. And where is that coming from? We don't know. It has invested $1.5 billion in U.S. manufacturing, but it does source globally, but a lot is in the U.S. So maybe they won't get hit as bad. And that's a big cap company, Shaw Industries, actually. Okay, another one I took a look at was McLean, and they are the largest and most stable distribution leader in the U.S. So they have 25,000 employees. They've been in operation for 128 years. Buffett likes these old companies, right? They beat out everyone else. They are the sole survivor. And they deliver, so their distribution, they deliver restaurant and retail solutions for convenience stores, mass merchants, drugstores, and chain restaurants. Again, if trucking and the tariffs hit products like cups, plates that go into restaurants, or even into convenience stores, you're getting that Slurpee. You got to get that cup from somewhere. Where is that cup made? From what I understand, a lot are made in China. So the tariffs aren't going to hit McLean itself, but their customers. And then we'll see what happens, which is like the downturn in the distribution with the supply chain getting hit. I took a look at MyTech, and they are the power of design, make, and build. So they have engineered products with software services and automation. So they make truss systems, framing, connectors and fasteners, wooden screws for single-family homes, commercial buildings, multifamily. And I could not find where they make any of these products. So we'll see, right? We'll see what happens on that one. Then I took a look at their shoes. Berkshire Hathaway is a big shoe manufacturer. They own H.H. Brown, which the website said started its first shoes in a factory west of Boston in 1883. So they make a line, Born. Women, we know Born. We wear those sandals. Comfortiva, that's sold at Nordstrom's, I know. Dexter Bowling, which is makes one of the top bowling shoes. Corky's, Nursemates, Soft. Those are popular for women as well. SOFFT is the name. Soft Spots, a couple of others. That's one of their shoe brands. Then they also own Justin brands. So this one is an interesting one. H.J. Justin left Indiana in the 1870s. He moved down to Texas, where he started to repair the boots of cattlemen driving west along the Chisholm Trail. Then he got so good at it, he opened his first custom boot shop in 1879. So Berkshire owns Justin brands. They make Justin boots, Tony Lama, which started in 1911, Chippewa work boots, the Nakona Western boots, a couple of others, But combined, these two brands now make 18 shoe brands. They're headquartered in Connecticut, but there's nothing on the website about where they manufacture. So I don't know if some is in the US or none, and where it is, if it's outside the country. But I'm assuming, given that the US now makes very few of its own shoes, except a little bit for the military, there's a few others who are making partial shoes, like 70% of the shoe is made in the US, but like other component parts come from outside the US. Some of those are out there now too, with like Hoka, or a New Balance is making some, but everybody else is making manufacturing elsewhere. So what's going to be the impact on these footwear brands? We don't know. Then I took a look at Marmon. Now, this Marmon is kind of like a mini Berkshire Hathaway. It's a conglomerate within the conglomerate. They have 11 industry groups globally, $12 billion in revenue. So it's a small version of Berkshire Hathaway in a strange way. But I took a look at the industry groups. One that really stuck out to me was Marmon Metals, because we have those steel and aluminum tariffs going on right now. And they've been servicing customers since 1907. And what they do is they're metal services companies. So they have several companies within the Marmon Metals overhang, which supplies specialty pipes and tubing for many industries, including petrochemical, agriculture, construction. They have 30 locations across America. So that is likely, I'm assuming, being impacted by the tariffs. Then they also have industrial products category. And within that category, they have 20 plus companies with facilities on 4 continents. They have 1,500 employees. They make industrial gears, gloves, and fasteners, wheels, axles, gears, also air-cooled condensers, cooling towers, pumping. So I dug down a little deeper into it, because you have to go into Marmon, then you have to go into industrial products, then you have to click on one of the 20 plus companies within that category. And so I came upon Amarillo Gear, which is the foreign subsidiary. They also have US, and they have a range of spiral, bevel, right angle gear drives to serve customers in the Chinese mainland, Taiwan, Southeast Asia, India, Europe, and the Middle East. That's been going on since 1917. So these are all the old industrial type of companies. Again, Warren Buffett loves these because eventually these are the winners in their category. And nobody else is really going into these businesses at this point. So, they've kind of get monopoly power, but now they may or may not, we don't know, be tariffed on some of this. And it will probably have a shifting supply chain, and companies that have multiple manufacturing in different countries will be trying to shift it. We're already seeing that with some of the automakers. They're going to, I just saw the other day, Mazda at one of its plants in the US is not going to manufacture the cars it was making to send to Canada now, because those are going to be tariffed. So instead, it's only going to make the cars that they're going to sell actually in the US from that plant, because again, that makes sense. They're not going to be tariffed to those. So they're just kind of switching up their manufacturing capabilities if they can do so. So these are just a couple things. I wanted to do one more. So I looked at Pilot Travel Center. Remember when they bought Pilot? Those are the truck stops across the U.S. They started in 1958 with just one location. It's the largest travel center network in North America. But again, if trucking is really hit because the ships aren't coming into the port, then you're going to have fewer trucks coming into Pilot as the supply chain gets all wonky. And, we have this possibly slowdown in the logistics area. which is really the area that's going to get hit, right away in the next couple of weeks if these tariffs continue on. So Pilot is another one that's probably going to struggle. Then I did take a look at Oriental Trading Company. Never looked at this one, and I was surprised to see Berkshire bought it in 2012. And they were actually founded, Oriental Trading Company, in Omaha by Harry Watanabe, a Japanese-American businessman, in 1932. So Buffett would have had very much a familiarity with this business as it was in Omaha all those years. And it was the first American wholesaler of gifts and novelties. And what that is, it's like little graduation gifts, the party favors for your graduation, like the graduation streamers you put up on the walls, decorations. They sell craft kits, camp supplies. But if you go on their website, because they have had a website since 1999, you can see they have like whole ads for, various holidays, but like they had camp supplies starting under $3.98. So these are kind of big bulk sellers too, to like nonprofits, schools, camps, things like that would need to order like a bunch of these. I was kind of intrigued by one of the bulk sales you could get there. So you can buy 20 pounds. It's a mega bulk, 2,000 piece patriotic red, white, and blue candy assortment. You can buy that off of Oriental Trading Company. So if you're on that float for the 4th of July, you might want to have a bunch of candy you can just throw out, right? And it's $169.99. And it did tell me I was going to save 14% by buying there. You can also just buy party supplies starting at $2.97. The website does say they ship from the U.S. in one business day, but it doesn't say where they manufacture any of this. But considering the price points, I'm assuming it's mostly outside the country, although we don't know because it doesn't say. So will this get hit as well and hard by the tariffs? Even a 10% tariff, say, out of Southeast Asia. I don't know. This would be a question I would also have of Warren Buffett if I was attending the annual meeting and could give him one. But this is an interesting business. Also, just a side note, in 2021, Oriental Trading purchased Morris Costumes, which had been a leader in costumes for 50 years. So now they're also big in Halloween as well. I don't know where they make those costumes either. So that was just a couple of the companies that Berkshire owns. Again, a lot is in the insurance side as well. But if you actually scroll down and kind of click on the links, you can find a page that links to all the Berkshire Hathaway companies. And you click on there, you will see that they're in all of these types of manufacturing type of areas, retail. They own a furniture company. They own jewelry stores. There's See's Candy, remember them? So they could get hit from all angles. The tariffs, a possible slowdown, transportation slowdown. We don't know. So that's what I'm going to be looking for this weekend. And then in addition, I did want to cover what's happening in the stock portfolio because he's going to get questions about that. And he has partially been answering some of them. So Apple, they have been selling. That's kind of quieted down now. The ticker, of course, is AAPL. It is now 28.1% of the portfolio. It's still the largest position. A lot of people have been congratulating Warren Buffett on selling kind of at the peak or near the peak in the shares. And now he looks pretty smart given the bigger sell-off we've seen this year in the Mag 7s. He's sitting on a lot of cash, but still sitting on quite a big position in Apple. Number 2 is now American Express. American Express, ticker AXP. They've already reported earnings. It was pretty solid earnings report once again from American Express. They are on a little bit the higher level of spending with the credit card, and that has been holding up well. It's now 16.8% of the equity portfolio. Then number 3 now is Bank of America. It's fallen down. He has been selling some Bank of America. BAC is the ticker there. It's now 11.2%. And then number 4 is interesting. Coca-Cola has surged up there to number 4 now at 9.3%. He has owned Coke for many, many years now. He's a huge fan. He's a fan of just drinking it, let alone, the stock itself. It's paying that great dividend as well. That's been very consistent over the years. These shares have surged because some of these consumer type of products have been kind of a place to hide out in, I guess you could say. And so Berkshire has been hiding out in it for a while, and you can see that that's why it's surging up there. Let's take a look at what exactly is happening with Coke. I don't think they have reported earnings. Let me look. No, they're reporting earnings this week as I'm recording this. So we're going to hear more from Coke then. It is trading near its all-time highs. And forward P now of 24.3. It's not cheap. Earnings expected to only be up 2.8% this year. So you're paying a lot for these earnings. You are getting that decent dividend. It's yielding 2.8%. That's not bad. But PEG ratio now 3.9. That's pretty pricey. And again, the shares are busting out of the zone it's traded in the last couple of years and now near its all-time highs, even with those earnings expected to at least be moving up. Let's take a look at the detailed estimates because I am just kind of curious, even though by the time you hear this, it'll already be out on the earnings. And, the analysts aren't doing that much. They have lowered a bit for this quarter that you'll already know about, but not dramatically. There's not a lot of surprises in a company like Coke anymore. And so it is kind of trading, the analysts, when they do change estimates, it's only a couple pennies here or there. But 2026 is looking better for right now, with earnings expected to be up 8%. But again, you are paying a pretty price for these earnings at 24 times. So that's Coke. It's number 4 on the Berkshire list. And then we get a couple of the big oils. We get Chevron. It's at number 5 now at 6.4%. And then we get Occidental at 4.6%. He was adding pretty consistently to Occidental. He's always said he's not looking to buy it outright, but he is the largest shareholder in it. And so that's going to offer a big sway to something like an Occidental and its management. Energy stocks have really fallen back because oil is down. Natural gas is not as terrible, but it's still people are pricing in a recession, and that means lower oil prices. And so that's going to hit all of these. Occidental trading at 15.8 times, but the earnings are coming down on all of these as the price of oil comes down. 2025 on Occidental, earnings expected to fall just 1.7% though. That's not too bad. I've seen worse on some of the others. Occidental also has a chemical side, so maybe that's going to offset a little bit. Chevron is big oil, so it's got refining. It's got a little more global exposure. But even then, Chevron earnings expected to be down 16% this year after 23% decline last year. So that oil price declining is really hitting the earnings now on these guys. But Chevron trading at 16 times with a dividend yielding 4.9%. So you're still getting that juicy dividend with the big oils here. And then number 7 is Moody's, ticker MCO at 4.4%. And then number 8 is Kraft Heinz, ticker KHC. So I do have to say the top 8, I stopped at 8. Kraft Heinz is 3.7, and then it really starts to drop off after the top 8. So you're not going to impact quite as much of the portfolio. We do still have Visa and MasterCard in there, but they are very small positions. The Amazon position is still in there as far as we know. And so these are, again, very small positions now overall. But this mix is interesting with the 2 big consumer brand companies in there, 2 big oil companies. He still likes his financials with American Express and Bank of America. And then one of the 4 pillars, as he says, with Apple still dominant in the portfolio. Now, we haven't really mentioned the huge cash hoard. He has it invested. It's going to generate some more billions again when they report earnings. And we'll see how big it has grown to. What was it? A little over 330 billion, right? Everybody's waiting to see what will Buffett do with this. But remember, he is in the twilight now at the end of his career. And it gets a little more difficult to deploy that level of cash into a lot of things during a trade war, no less. So we don't know, but the shareholders are still benefiting with the nice treasury investments. They're getting dividends paid into that cash hoard as well. But I've said for a while, I believe that they're going to eventually pay it out to the shareholders because it is, after all, your money. I don't own any Berkshire Hathaway, but I've been thinking about buying it for a while now just to get a possible dividend payout. It would be equivalent to like a government stimulus check, really, to the Berkshire Hathaway shareholders, because it would be pretty massive, especially if they try to get rid of, nearly all of it back to the shareholders. But we don't know. And so we're still kind of waiting on the sidelines. That's going to be the other topic overhanging what is going to happen at this meeting. But this is an important one. I will be on the road actually when it's going on, but usually you can listen to it or watch it on either Yahoo Finance used to have it, then CNBC had it last year. I'm hoping they have it again. I'm going to be recording it so I can watch the whole thing over the weekend if I can't watch it live. I really suggest all value investors do the same. We don't know how many more times we will actually hear from Buffett. He has seemingly kind of been doing less media now as well. So we don't even get a chance to have him just like call in on CNBC much anymore. And so this is it. This is going to be an important one. So tune in, because I will be. But Berkshire Hathaway, a very interesting company here, a lot of moving parts, a lot of things that are going to be impacted both by tariffs, a possible recession, and not just in the equity portfolio. Though some of those companies will be impacted too, but in their main businesses outside of insurance. So let's recap the companies we talked about. So, of course, there's Berkshire Hathaway. I've been saying for a while, it's too expensive for me to buy it, and it still remains so. It barely pulled back during this pullback here in 2025 because it's considered to be kind of a safety play and a place to hide out. It's got all that cash. That's what people want to be in, but you can really just be in your own cash. You don't need to be in Berkshire Hathaway's cash. But I get it. You might want to get the 5% on that cash. But the stock has been holding up. It has been a place to hang out in. But it remains an expensive stock on a PE basis, price to book, price to sales, price to everything. Forward PE now still at 26.4. So that is very expensive for Berkshire Hathaway on a historical basis, and PEG ratio of just 3.7. So that's expensive. Let's just look and see what the other stuff is while we are finishing up here. Price to book is 1.7. Price to sales is at 3. The price to book is the only thing that would be in classic value fundamentals, but price to sales is a little pricey now as well. So what will happen? This is the question of this decade, really, with Berkshire Hathaway. And for those of you going to the annual meeting, enjoy. Send me some tweets if you're from there and you are going. Let me know what's going on my Twitter. You can send it there. I'm on Blue Sky. I'm on StockTwits. I'll be on any of those. And I will be checking on StockTwits and other places to see what's going on from afar. So be sure to be posting in those places if you are attending. Or even if you're just like live watching it on TV, that's always helpful too. So we had Berkshire Hathaway, the B shares. If you can afford the A, good for you. But most of us are in the Bs. It's BRK.B on Zacks. Then we talked about Apple, AAPL, American Express, A as in Adam, X, P as in Paul, AXP. Bank of America, B as in boy, A as in Adam, C as in Charles. Chevron, CVX, Occidental, OXY. Then we had Moody's, M as in Mary, C as in Charles, O, MCO. And Kraft Heinz is K, H as in Harry, C as in Charles, KHC. So let's enjoy this week and this weekend, and I'll see you back again next week, maybe with an update on what went on, and certainly with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.